Welcome to Accountants. In this lesson, we're going to be looking at how to prepare the statement of comprehensive income or the income statement, the statement of financial position or the balance sheet, as well as the statement of changes in equity using pre-adjustment trial balance and additional information that will be given. Now, we have done very similar examples like this before, but we did the balance sheet alone using the pre-adjustment trial balance and additional information, and we also did the income statement alone using a different pre-adjustment trial balance and additional information. And as many students have requested, they want to see how to prepare the statement of comprehensive income or the income statement and the statement of financial position or the balance sheet using the same pre-adjustment trial balance and additional information that you will be given. But you're also going to complete, of course, the statement of changes in equity using the exact same information. So here we are told that we should use the information given below to prepare the following for the year ended 28 February 2020. And we are told that the following information relate to Villa Cargo, which is the name of the company, for the financial year ended 28 February 2020. So how do we go about preparing this one here? So let's take a look at the information. Down here, you can see we are given the pre-adjustment trial balance on 28 February 2020, and then we are also given the additional information. You can see from number 1 all the way to number 12. So that's what we're going to use to prepare the three statements. And we're going to prepare the three statements using Excel. Okay, so here's the document that we're going to use. Here on our far left, we have the balance sheet or the statement of financial position in blue. And here in the middle, we have the statement of comprehensive income or the income statement in orange. And in green, we have the statement of changes in equity. And that is how we're going to complete them. So let's begin. What I always like doing, now you can complete them in any order you want. You can do the statement of financial position first or the other statements first, and then you move on to the next one after you've finally completed it. But when I have to complete more than one statement using the pre-adjustment trial balance and additional information, especially the income statement and the balance sheet, I like to do them together at the same time because they're information which will relate to both of them when we do the calculation. So I just like to plug them in. So let's begin. I like to move from the top of the pre-adjustment trial balance all the way to the end. Okay, and there are various ways we can prepare it as well. You can check out our other lessons, by the way, which are in the links in the description below, which we showed you how to prepare the income statement alone and the balance sheet alone, as I have alluded to. Okay, so as I look at the pre-adjustment trial balance over here, I'll be looking at them in conjunction with the additional information that we are given. So here's what I mean. For instance, if I'm going to look at land and building, I'm going to put it in. As I put land and building in the pre-adjustment trial balance, it's 350,000 rand. But I also look at additional information. Is anything in the additional information given on land and buildings? If there is, then it might affect the amount. So I'm not going to put the 350,000 rand in the financial statement. So I'll have to take account of that. If nothing in the additional information is said about land and building, then I know the 350,000 rand we're given here stands as it is. So I'm just going to put it in the relevant financial statement. So let's begin. Let's begin with the statement of financial position. I know land and building is a non-current asset, and you need to know what goes into the statement of financial position, what goes into the statement of comprehensive income, as well as what goes into the statement of changes in equity for you to complete this well. Okay, so I hope you know that. And if you do not know that, the balance sheet, you record all your assets, your equity and your liabilities. Your income statement, you record your incomes and expenses, and your statement of changes in equity, you just recording the change in the equity section of the company. Okay, obviously this is a sole trader. If we were not told, it's a sole trader that we are completing it for. So it's actually a very simple exercise. So the first thing that I like to do is in my statement of financial position is just put the assets and then put the first label, which is the non-current assets, and that's how you complete it. And then here I will have my total for the non-current assets. Okay, so the first one I'm going to put there, as you saw in the pre-adjustment trial balance, we have land and buildings, and it's 350,000 rand. Okay, so first let's look at additional information if there's anything on land and buildings. Now I've gone through this before, so I don't want to take a lot of your time going back and forth. I already know that land and building is not in additional information. So if it's not in additional information, then we know that we're just going to take that amount that we are given, the 350,000 rand, and put it in. So I go to the non-current assets section and I just put land and buildings, Now, different people will prepare the statement differently. What I mean is they may put the land and buildings and the vehicles and equipment together and group them and put them as property, plant, and equipment. But here we can also separate them. You'll still get all your marks, okay? So I'm just going to separate them for us to see exactly what goes there. Okay, 350,000 Rand. And obviously it totals it up because I'm using Excel. So whatever I put down here, it's going to total it up and put it here in the total non-current assets. Okay, now that we have done the land and buildings, let me highlight it to just show that we have just completed it. The second one is equipment. Okay, and we are given 180,000 Rand. And obviously this is the cost of the equipment, meaning the cost at which you bought the equipment. Now you also check the additional information. Are we given anything here relating to equipment? Well, the only thing we are given relating to equipment is the depreciation. Okay, we are given the depreciation here, which will take into account when we are dealing with the accumulated depreciation dealing with equipment. But other than that, there's nothing on equipment, on the purchase of equipment, or on the sales of equipment, or any other thing relating to equipment. So just want to put equipment at 180,000 Rand. So I write down equipment, and I put down the 180,000 Rand. Okay, then we highlight that we have just done that one. Okay, and then the next thing that we have here is the accumulated depreciation on equipment, and we are given the date there is as at the 1st of March 2019. So this is the beginning of this financial period. Okay, and we are told that it was 18,000 Rand at the beginning of this financial period. Now, of course, we need to calculate the depreciation for this specific period and add it to this 18,000 Rand, and it will be the accumulated depreciation on equipment. Okay, so let me just copy that. And then here I will put accumulated depreciation on equipment, and then that's gonna come here. But we know that we have to calculate the one for this year, so it's going to be the 18,000 that we are given in the pre-adjustment trial balance plus the one for this period. So we need to calculate that. So I'm just gonna do my calculations down here. So I hope you'll follow along well. Okay, so let me do this. So I'm gonna say depreciation for the period for equipment. Okay, and then once I've written that down, I can go and calculate the depreciation for equipment for this specific period. Okay, so here the note number 3 is what relates to equipment. So I'm going to read here: depreciation is provided annually on vehicles at 25% per annum using the straight line method, and equipment at 20% per annum using the diminishing balance method. Now I hope you know how to calculate depreciation using the two methods. If you do not know that, we have a lesson specifically on that, and you'll find the link to that lesson in the description below, where we explain the difference between the straight line method and the diminishing balance method, and we go through an example of how to do that. So I'm quickly going to do that. So equipment uses the diminishing balance method, and it's 20%. So we need to take note of that. Okay, it's 20%. And here we already have the accumulated depreciation at the beginning of the period of 18,000 Rand. So since it's the diminishing balance method, here's how we'll calculate it. We're going to take the cost of the equipment, which is the 180,000 Rand, which we're given in the pre-adjustment trial balance. So I'm going to say equals 180,000 Rand. And since it's the diminishing balance method, we deduct the accumulated depreciation at the beginning of the period, which we're given, which is 18,000 Rand. And then 18, and then we multiply that by 20%. Remember, we're told that the equipment depreciates at 20%. So I'm going to put 0.20, which is the same as 20. And there we have it. We have been given the depreciation for this specific period for equipment. Okay, 32,400 Rand. Now I know all I need to do is to add the 18,000 Rand plus the 32,400 Rand, and it will give me the total accumulated depreciation for equipment. So I'm going to add 32,400 Rand, and there we have it, 50,400 Rand. Now I need to put them as a negative because accumulated depreciation is a negative asset account and it reduces your asset. Okay, so I put it as a negative. Okay, now that I've done that, we can move along. Okay, so I've just done the accumulated depreciation on equipment. Now we move on. Vehicles, it's 169,000 Rand. Now, is there anything else on vehicles in the additional information? Well, if the only thing we are given on vehicles in the additional information relates to the depreciation, then we'll do the exact same thing we did for equipment. So at the actual value of the vehicle is the 169,000 Rand. So we'll record that. So let me copy that. We go to our balance sheet or the statement of financial position. We record our vehicle, and then we put the 169,000 rand which we were given, 169,000 rand, and then we highlight this one because that's what we've just done. I hope you're following along well. If you are confused or you also want to get more knowledge, you can also check out our other lessons, which we did as I had just mentioned. We do it exact same way we're doing this one with a different example. Okay, and then here we have accumulated depreciation on vehicles, and we're given at the beginning of the period it was 50,700 rand. Okay, so we need to record the accumulated depreciation on vehicles. How much was it? It was 50,700 rand. So we're doing it the exact same way we just did for equipment, 50,700 rand. And then we add the depreciation for this specific period. Now, what were we told? We were told down here that the depreciation is provided annually on vehicles at 25% per annum using the straight line method. Now, it's 25% and it's using the straight line method. So that's easier if you're doing the straight line method. So I'm going to just type here depreciation on vehicles. So these are my workings down here. It's the straight line method, so remember that. So we're just going to take the 169,000 rand, 169,000 times the 25%, which we're told. That's the percentage at which the vehicles depreciate. So I'm going to put 0.25, which is the same as 25%, and there it has given me 42,250. Okay, now that I've done that, I can now put my workings in brackets plus 42,250. So I'm just going to calculate it here, 50,700 plus 42,250, and there it has given me the answer, 92,950. Okay, so now I'm done with both the depreciation for vehicles and the depreciation for equipment. So let me highlight that one, and the reason I'm highlighting is because I want to know which one I'm done with so that I don't forget one or I don't go and look at it over and over again thinking that I'm not done with it. Okay, so you can get into the habit of doing that, which makes your work easier, or you can just tick once you have done a specific one. The next one we have here is capital. We are given the capital of 552,200 rand. Okay, so the capital we know goes into the statement of changes in equity. Okay, and we're going to do that. So the statement of changes in equity here, we are told that we need to complete. Okay, that was the third requirement. So we know with the statement of changes in equity, we start with the balance at the beginning of the period. Balance at the beginning, or you can put the actual date of the beginning, and then you put the balance, okay, which is the one which we are given for capital. We're given the capital of 552,200 rand. So I'm just going to put the 552,200. Okay, now we have just done the balance at the beginning for capital. The next one that we need to do, so let me just highlight that one here. Now, if you notice here, we did it a bit differently from the other one where we put the capital in the statement of financial position, okay? Or we can group everything. You'll see exactly how it will look, okay? Now that we've just done for capital, we go to drawings, okay? The next one is drawings, which is 56,500 rand. So we need to record it in our statement of changes in equity as well. So we put the drawings and we put the amount which we are given is 56,500 rand. So 56,500. Okay, and it's in negative because drawings decrease the equity of the business. Drawings is what the owner took for personal use, and then we highlighted drawings that we have just done. And remember, the answer, the final answer in the statement of changes in equity will go to the equity section of the balance sheet. Okay, that's why we're also completing the statement of changes in equity. Okay, next thing we move to is the fixed deposit. We are told that the fixed deposit is at 9% ACM Bank and it's 150,000 rand. Now, very important for you to remember this. Fixed deposit, if it's for longer than 12 months, it's a non-current asset. But if it's for less than 12 months or if it matures in less than 12 months, then it becomes a current asset. I hope you know that already. So let's go to our additional information and see what they say about the fixed deposit. Okay, number 9, we are told here the fixed deposit at ACM Bank was made on the 1st of March 2019, meaning at the beginning of this specific period, and matures on 31 July 2020. Okay, but when are these financial statements for that we are completing? It's for the 28th of February 2020. And from the 28th of February 2020 to the 31st of July 2020, that's a few months, okay? So it's less than 12 months. That means the fixed deposit matures in less than 12 months and it is a current asset, okay? It is a current asset. So I'm going to record the fixed deposit. Now, as you can see here from our pre-adjustment trial balance, we don't have any other non-current assets. As you can see down here, if you know what is a non-current asset, you can notice that we don't have any other non-current assets. So we can just move to current assets, okay? So I'm just going to type the current assets, and the first one that we have is the fixed deposit. Let me write the fixed deposit, okay, because it matures less than 12 months. If it was longer than 12 months, remember, we would put it as part of non-current assets, okay? And the fixed deposit, how much was it? We're told it's 150,000 rand. So I put the 150,000 rand there, okay? And then we move along, okay? Before I highlight the fixed deposit, remember these things in brackets here in with the percentage, 9%. It's telling us what the interest rate per annum is that the company is earning by investing this money in ACM Bank, okay? By having this fixed deposit, you'll be receiving an interest income at the end of each year. So we will still have to deal with that in the income statement and see if it also affects our statement of financial position. So in fact, let's do that right now. Let's look at our note here. I know it's note number 9. We are told that the fixed deposit at ACM Bank was made on the 1st of March 2019 and matures on the 31st of July 2020. Provide for outstanding interest on fixed deposit. How do I know how much that outstanding interest is? Well, let's go and see here. I know it's in the nominal account section and we have interest on fixed deposit. Here we are told it's 11,250, but we know that we earn 9% per annum. So if we are to calculate how much we should have earned for the 12 months, we're just going to take the 150,000 rand times 9%. So let's do our workings here. Interest on fixed deposit, which will go in our income statement, it should be equals to 150,000 rand, which is the fixed deposit total, times the percentage which we were given in brackets, okay, which is the 9%. So times 0.09, which is the same as 9%, and we have 13,500 rand. What does that mean? It means that the interest on fixed deposit should actually be 13,500 rand. So in our nominal account section, if we see the interest on fixed deposit here, it's 11,250. That means that they still need to pay us the balance. How much is the balance? Well, here's the balance. And we know that if they have not paid us the full interest on fixed deposit, that becomes an accrual. What is an accrual? Accrual might be money that we have not yet received or money that we still owe someone. But this accrual is interest receivable, okay? Interest receivable. So the interest receivable here is how much we are still yet to receive. Receivable. Let me do it in brackets. It's going to be the 13,500 rand minus the 11,250 which we have already received, minus the 11,200 or which we have already accounted for, okay, minus 11,250, and it will give us how much interest we are yet to receive. Goes to 13,500 rand minus the 11,250, and that has given us the interest that we are still yet to receive. Okay, now that we know the 2,250 is the interest that we are yet to receive or take account of, it's a current asset. Okay, it's a current asset. So I'm going to put here interest receivable because we are yet to receive it, and it's 2,250. Okay, the 2,250 we have not accounted for. Remember, we only accounted for 11,250. Okay, and then we know that it's going to be part of the interest income in the statement of comprehensive income. So we know that the total interest on fixed deposit should be 13,500 rand, which will go into our statement of comprehensive income, and the one which you are yet to account for is the 2,250, which goes into the balance sheet as interest receivable. Okay, now that you have just done that one, we can highlight this one. Okay, we'll move on to the loan at ACM Bank at 11%, which is 88,000 Rand. So let's see if there's anything which is spoken about concerning the loan in the additional information. Number 5, note number 5, we are told, okay, I forgot to highlight number 9, the fixed deposit. Okay, the loan. Number 5, we are told the loan with ACM Bank was obtained on the 1st of March 2019, which is at the beginning of this financial period, and we should provide for the outstanding interest on loan. Repayment of the loan would only commence on the 1st of May 2020. So we are saying that we haven't even started paying for this loan. So that means we can account for the full interest expense for the full year. Okay, so that's what we need to do. So we need to provide for the outstanding interest on loan. So do the exact same thing we did for the interest income or the fixed deposit. Okay, so we look, okay, let me highlight this one also. We did this one. So we look at the interest on loan, which we are given here. Okay, the 8,067 Rand. Okay, that is how much we have accounted for. But how much should it exactly be in this period? We do the exact same thing we did for the fixed deposit. So we're going to put the interest on loan, and we're told here it's at 11%. Okay, so we're going to take 88,000 Rand times the 11%. So we get the interest on loan. Interest on loan is going to be the 88,000 Rand times the 11%. And how much will that give us? Gives us 9,680. And how much did we account for? We accounted for 8,067 Rand. That means there's more that we still need to account for. Okay, so that means we still owe on the loan. Okay, and that is a current liability. Okay, because it's another accrual, but we still haven't accounted for it. So interest payable is going to be the 9,680 minus the one that we have accounted for, 8,067. Okay, and how much will that give us? Equals to 9,680 minus 8,067, and there it has given us 1,613 Rand. Okay, so that means that we need to account for this. So we're going to have the interest payable in our current liabilities section. So we will account for the interest payable when we get to the current liabilities section. So we have calculated everything we needed to do for that one. So I'm not going to highlight it as yet, because even this loan here of 88,000 Rand, we will account for it when we get to the liabilities section of the balance sheet. So I'm not highlighting it so that we can remember to do that. The next thing that we have here is debtors control, and we have 73,000 Rand for debtors control. Now we know that debtors control is a current asset, so we should put it here, debtors control. And then if we go back here, we just need to go to our other information and see if there's anything pertaining to debtors control. So let's check. The main thing that will usually appear is that you had a bad debtor or you had a credit loss. So I'm sure it's also here. Here we are. We have number 7. We are told that a debtor, K. Inol, who owed 5,000 Rand, is declared insolvent. His estate paid Villa Cargo 60 cents in the Rand. This has been recorded. The balance of his account must now be written off. Okay, so the 60 cents to the Rand that he paid has been recorded. So we need to record the balance of his account as a bad debt, because it must be written off, because he was only able to pay 60 cents to the Rand. So the 40 cents to the Rand needs to be accounted for. Okay, so that's a bad debt or a credit loss. So we need to calculate what the 40 cents to the Rand of 5,000 Rand is. Okay, so here's how we're going to do it. We're going to write down here bad debts or credit loss, which is the same thing, and then we're going to take, okay, let me just put it in brackets so to know how to calculate it. 5,000 Rand, which is how much he owed, times the 40 cents to the Rand, and it gives us an amount of 2,000 Rand. Okay, so now that we have the 2,000 rand, we know that there is a bad debt, and we know that a bad debt reduces our debtors control. Okay, so our debtors control that we have here, we're going to take the 73,000 rand which we were given in our pre-adjustment trial balance. If we go up, you'll see that the debtors control is 73,000 rand. So we're going to take that 73,000 rand and we're going to deduct the bad debt that we have. Okay, so 73,000 minus the bad debt of 2,000 rand, and it gives us a total of 71,000 rand. And that is our current debtors control. Okay, now that we have done that, let me highlight the debtors control. And remember, the bad debt that we have just calculated will go into the statement of comprehensive income or the income statement under operating expenses. And you'll see how that will work when we get to the income statement. Okay, and then the next thing that we have is the provision for bad debts. Now we know that the provision for bad debts is a negative asset account or contra asset account. So it deducts or it reduces our debtors control. Okay, so we're making a provision in case we have bad debts for the coming year. Okay, and here we are given 3,400 rand. But what are we told in additional information? There's usually something on provision for bad debts, most likely in most scenarios. Okay, let me also highlight this one that we have just done. We just need to remember to put the bad debts in the operating expenses section of the income statement. Okay, number 8 tells us that the provision for bad debts must be adjusted to 5% of outstanding debtors control. Very important. That is the outstanding debtors control. Outstanding meaning the remaining debtors control after taking out the bad debts, which we have just done. Okay, so we're going to record the provision for bad debts here, or the allowance for credit losses, which is the same thing. And then it's going to be the 71,000 rand of debtors control, which we calculated over here, and we multiply that by the 5%. Okay, so if we multiply that by the 5%, it should give us the new provision for bad debts, which we'll have here. And remember, it's going to be as a negative because provision for bad debts is a negative asset account. And there we have it. We have minus 3,550 rand. Okay, that is our new provision for bad debts. Now, the next thing that we need to do with provision for bad debts is to compare which one is higher. Is this new one higher or the one that we have in the pre-adjustment trial balance? Okay, because that will affect our income statement. It will go into our income statement. So if I put here the provision for bad debts, I'm just comparing the old bad debts to the new bad debts. Okay, so the old one, how much was it? We go up, you can see the provision for bad debts is 3,400 rand. That is the old one. But the new one is 3,550 rand. Okay, so I like to take the old one and deduct the new one. If it gives you a negative answer, meaning the old one is smaller than the new one, that means you have a provision for bad debt adjustment, which is a negative, which will go under operating expenses. Okay, so we have the old one was 3,400, and then we deduct the new one of 3,550, and you can see there that we have a negative. Okay, so that means the difference between the two is 150. So I'm going to put 150 there. So we know that the new one is higher than the old one. That means this 150 here will go into the operating expenses section of the income statement because it's an expense, because our provision for bad debts has gone up. Remember, every time a provision for bad debts goes up, it's not good for the company because we are predicting that more and more people will not be able to pay us. If it went down, it was going to go under the other income section of the income statement. Okay, it's going to go under other income and you'd put it there. But here it's a negative, so because the new one is greater than the old one. If you'd like to understand more on the provision for bad debts, we have a lesson specifically for that. You'll find the link to that lesson in the description below. Okay, so we'll just remember to put this provision for bad debts in the operating expenses section of the income statement when we get there. Okay, the next thing that we do, so let me highlight this one. Okay, and then we go down to the note number 8, which we used to do that, so I'll highlight that one as well. Okay, the next thing that we do, let's go back to our pre-adjustment trial balance, is the trading inventory, and we are told it's 44,700 rand. 44,700 rand. Now we look at the additional information that we are given, And we have the note 1 here. We are told that according to a physical stock taking, the following stocks were on hand on 28 February 2020. And we are told that trading stock is 43,000 Rand and consumable stores is 1,500 Rand. Now, one thing to note here is that the trading stock after the physical stock taking is the actual trading stock that are in our stores, okay? Because they counted and they saw it's actually 43,000 Rand worth of trading stock. But according to our books, we have trading stock worth 44,700 Rand, okay? So in reality, it's only 43,000 Rand. So we have a trading stock deficit because what is in our stores is less than what we have in our books, which is in the pre-adjustment trial balance. So we need to account for the trading stock deficit because it's an expense. Okay, so we go down here, we have trading stock deficit, and if it's a trading stock deficit, it's going to go into the operating expenses section of the income statement. And how much is it? Well, we're going to take the one in the pre-adjustment trial balance of 44,700 Rand, 44,700 minus the one which is in additional information, which is the 43,000 Rand, 43,000, and then it gives us a trading stock deficit of 1,700 Rand. That means we are short with inventory of 1,700 Rand because in our books we thought it was more than it actually was. Okay, so that will go into the operating expenses section of the income statement. Okay, so let me write down the items which will go into our income statement, which will still need to account for. Okay, the depreciation, we know it goes into the income statement. The depreciation for vehicles as well, income statement, and the interest on fixed deposit, income statement. Interest receivable, we have already accounted for that in the balance sheet. Interest on loan, it goes into the income statement, and then the interest payable, that goes into the balance sheet, but in the equity, in the liability section. Okay, so I'm just writing down the things that we'll still need to put into our statements. The bad debts goes into the income statement. The provision for bad debts, actually it's supposed to be provision for bad debts adjustment, and we know that the provision for bad debts adjustment in our case here is an expense because our provision for bad debts went up as compared to the previous year. So it goes into the income statement under the operating expenses section, as I mentioned. And the trading stock deficit also goes into our income statement so that we remember everything that we still need to account for in the income statement. Okay, now that we have our trading stock deficit, let's also look at the other item, consumable stores. Okay, now we mentioned this in our other lesson when we did an example of the income statement using pre-adjustment trial balance and additional information. Right here we have consumable stores, which is an expense. Okay, we have consumable stores down here, 7,000 Rand, which is an expense. Whenever we buy consumable stores, we record it as an expense. But at the end of the year, whatever we are left with in consumable stores, we recognize it as an asset. Okay, so whatever is remaining is not an expense anymore, but is an asset. Okay, so we'll remove it from our expenses. So our consumable stores is 7,000 Rand, but then according to the physical stock taking, the consumable stores remaining is 1,500. So we'll need to record that as an asset. Okay, and we will include that as part of our trading stock or inventory. Okay, so here's how we'll do that. First of all, let's account for consumable stores. We have consumable stores in our pre-adjustment trial balance of 7,000 Rand, but what is remaining is 1,500 Rand. So let's account for that. So the one which we'll have as expenses in the operating expenses section in the income statement is the 7,000 Rand minus the 1,500 remaining consumable stores. Okay, so let me write down consumable stores, and we have the 7,000 Rand in the pre-adjustment trial balance minus the 1,500 Rand which is remaining in our offices, okay, or in our storehouse. So what do we have there? The answer is 5,500 Rand. This goes into the income statement and it goes into the operating expenses section, okay, because that's what we've already used up in this period. And whatever is remaining, which is the 1,500 Rand, will be part of our inventory or trading stock. Okay, so our trading stock, which will go into the current assets section of the balance sheet, will be the 43,000 rand worth of the inventory or trading stock plus the consumable stores which has remained. Okay, and you'll see that now in our additional information how I got that. Okay, so what I'm saying here is that when we are told according to a physical stock taking, the following stocks were on hand on 28 February 2020, we will add the two together and put them as trading stock. Okay, others may prefer to put it separately, put trading stock alone, and then put consumable stores on hand alone in the current asset section. Okay, but many will just add it together, and under the notes to the statement of financial position or to the balance sheet, they will indicate that there is trading stock of 43,000 rand and consumable stores of 1,500 rand. Okay, but in our balance sheet we're just going to put one figure. We just added the two together and we have an amount of 44,500 rand, and obviously that goes into the balance sheet. Okay, and it's a current asset, remember that. So I put trading stock 44,500 rand. So remember, this trading stock consists of the inventory or the trading stock itself and consumable stores on hand, the one which is remaining, like I showed you in the additional information. And then if you are required to do the notes to the financial statements or to the statement of financial position, you will go to the inventory note and indicate that 43,000 rand is for inventory and the remaining 1,500 rand is for the consumable stores on hand. Now that we have done that, let me highlight. Okay, and then we go up the trading inventory, which is the same as trading stock, by the way. You highlight that. And then the next thing we have is creditors control. Okay, so creditors control will go into the current liability section of our balance sheet. Okay, current liability section of our balance sheet. So we're going to do that one as well. So I'm not going to highlight it yet. Okay, and we have nothing in additional information about creditors control, so we're just going to put the creditors control in the pre-adjustment trial balance as it is. And then bank, and we know that bank is a current asset. Okay, and we're told that the bank there is 13,000 rand, so I'm going to put bank here. And then before I put the 13,000 rand, I need to check if there's anything in additional information that is spoken about bank. So we go down to our additional information and see if there's anything concerning bank or that affected our bank. Okay, if we see number 6 over here, obviously you need to read every statement to ensure that it affects your bank or it doesn't. Okay, number 6 told us that on 28 February 2020, which is the very last day or the day we are preparing the financial statements for, a check of 2,500 rand was received from M. Edwin, whose account was previously written off as irrecoverable. No entry has been made for this. Okay, so we received a check from a debtor whose account was written off as irrecoverable. So that adds to our bank account. Okay, so for our bank account, remember we have 13,000 rand in the pre-adjustment trial balance. We're going to add that 2,500 rand which was received. Okay, so I'm going to put it here, 13,000 rand plus the 2,500 rand. And then before we continue from note 6, what else do we know about receiving money from someone whose account was written as irrecoverable? We know that that is called bad debts recovered. And what do we call bad debts recovered? What is it? It's an income. Okay, we consider it as an income because it's money we never expected to receive, and now we have just received it from a bad debtor or a previous bad debtor. Okay, so that is bad debts recovered, and that falls part of our income. Okay, and we know that all our income goes into the income statement, and this one will go into the other income section of the income statement or the statement of comprehensive income. Okay, so I'm going to call it here bad debts recovered or credit losses recovered. Okay, bad debts recovered, and we know it's an income. I'm going to put the 2,500 rand there, and it's gonna go into our income statement. Okay, this trading stock we've already done, so let me take that one off. Okay, so now that we have done the bad debts recovered, okay, we'll include it in our income statement. So I just need to highlight this one. And now that I've done that, you need to check if there's anything else that affects bank, and we have number 10, service fees according to the bank statement for February 2020 have not yet been recorded, and it's 275 rand. Okay, and how did I know there's something else that affects bank? Obviously, I've gone through this question before, so you need to go through your additional information very well. Okay, and you need to pinpoint what affects what account. Okay, there may be more than one thing, just as we have seen with the bank account. We have two things. So we're going to deduct this 275 rand because it's the bank charges, or it forms part of our bank charges. So we're going to minus the 275 rand, and that will give us our answer for bank, 15,225 rand. Okay, now that we are done with bank, so let me highlight that one. We just finished it. We move on to the next one. So we know that now we have just done everything that is in our balance sheet section or balance sheet account section. Now the only things which are remaining are the loan and the creditors control, which goes into our liability section of the statement of financial position. Okay, so we're going to get to that now. So let's go to our nominal account section, and here what we're going to be doing mostly is the income statement. We're going to do the income statement mostly, okay, because the nominal account section is usually your incomes and your expenses. Obviously, we'll also still have to go through our additional information. Okay, so let me highlight consumable stores, which I forgot to do when we did that one there, but we know we'll still have to account for it in the income statement. Okay, now that we have done that, let's go to our income statement, or the statement of comprehensive income. The first thing that we always record is obviously the sales, the cost of sales, and the gross profit. So let me just put those descriptions quickly. There we have it. The first one we're going to do is the sales, and then the cost of sales, and then we have our gross profit before we continue. So let's go to our nominal account section of our pre-adjustment trial balance. We have sales of 723,000 rand, okay, and then we have cost of sales of 389,122 rand, and we have sales returns of 8,000 rand. Okay, so the first thing that I like to check with the nominal account section when I'm doing sales, I just check what the amount for sales is, and I look if there is anything pertaining to sales, like the sales returns, which is a common one you will have. So what we're going to do, we're going to take the 723,000 rand minus the 8,000 rand, because the customers returned it back to us, so it's no longer a sale. Okay, so we're going to take the 723,000 rand minus the 8,000 rand. So that's what we're going to do here. So let me put them there, and you can see what I've done, and the answer is 715,000 rand. Okay, I hope that was easy enough. Just take your sales figure in the pre-adjustment trial balance minus any sales return if you have it. Okay, and we are done with that one. So let me highlight it. Okay, and by the way, there's nothing in additional information pertaining to sales and sales return. Okay, I know that because I have checked earlier on, instead of us checking them over and over again for the sake of time. Okay, the next thing that we do is the cost of sales, and here we're just given the cost of sales. In some examples, you'll be given purchases, and you have to take your opening inventory plus purchases minus any purchase returns, and you should be able to work out your answer. And we did that in our previous example when we look at the pre-adjustment trial balance and additional information, and we completed the income statement. So you can check out that lesson, which is in the link in the description below. But here we're just given the cost of sales, and we're not told anything concerning cost of sales in the additional information. And like I said, obviously I've gone through this question, so I know that we are not told anything concerning that. So we're just going to take the 389,122 rand, and we have our cost of sales. So under our cost of sales, I'm going to put it as a negative because cost of sales is an expense, 389,122 rand. Okay, and once I've done that, I just need to compute my gross profit, which is the 715,000 rand minus the 389,122 rand, and it gives me a gross profit of 325,878 rand. Now that we are done with cost of sales, let's go and make sure that we highlight it. There we go. And then we move to the next one. We are told here that we have rent income, and it's 53,900 rand. Okay, so that's rent income. And what is rent income? Well, that is other income, okay, and it will fall part obviously of our income statement. So let me put the label here as other operating income. And then the first one there, as we saw, is the rent income. So I will put down rent income. And obviously, we are told that it's 53,900 Rand. Okay, now we go to our additional information to see if there's anything on rent. And you can see here, number 4, we are told that the rent for February 2020 is still outstanding. Okay, and that is a common one with rent. They will tell you you have either not paid enough, or you've not been paid enough, or you have overpaid, okay, for the financial period. So here we are told that the rent for February is still outstanding. And the only rent we have in our pre-adjustment trial balance is rent income. So it relates to that one. Okay, so we are told here that we have not been paid the rent for February as yet. Okay, so obviously we need to figure out what that amount is. So we will know that this 53,900 Rand is for 11 months, okay? Because for the 12th month or for February is still outstanding, okay? So this is for 11 months. So the first thing that we're going to do is to calculate how much it is for February that we have not yet received. Okay, so obviously it will affect our income statement because it's rent income. We want to put the whole amount, including the one that we have not received. But the one that we have not received will also affect our balance sheet as rent receivable, or it's an accrual, okay? Accrued income that we are yet to receive. So let's go to our calculations down here. In fact, let's just do it here because we know that rent receivable is an asset, okay? It's an asset that we are yet to receive, and it's a current asset. So I'm going to put here rent receivable, or you can put accrued income. It's the same thing, rent receivable. And what is the amount there? Well, we'll have to do the calculation, okay? So we know that for the 11 months it was 53,900 Rand, as we can see here in our pre-adjustment trial balance, okay? And then we divide that by 11 months because we know it's for 11 months, okay? And then we should have our answer, rent receivable that we are yet to receive for the final month, which is February 2020, okay? And what answer does it give us? It gives us 4,900 Rand. That is how much we are still to receive, okay? And then in our income statement, we want to put the rent for the entire 12 months. So we know that it's the 53,900 Rand. And then we add the 4,900 Rand. And we should have our answer. And it is 58,800 Rand, okay? I hope you can see when you have not received all your income for a specific year, it will affect both your income statement and your balance sheet, just as we did for interest receivable. Remember the interest receivable that we did earlier on. Now we can highlight the rent income as well as in the other information that we are given. Okay, now we can move on to the next one. What do we have here? We have insurance, and we're given the amount there as 6,600 Rand. Okay, so just before we do the insurance, let's see if we have any other income. Remember, we had done some calculations down here below. Okay, and we can see what affects our income statement and what affects our balance sheet. And we can see that we have interest on fixed deposit, which is an income, but it will only come after the operating profit. Okay, so that will come later on. And the other income that we have is bad debts recovered. Remember, we record that as an income and we had calculated it, or we were given what the bad debt recovered is. So we're going to put that one as well under other operating income. So I'm going to put bad debts recovered, and the amount there is 2,500 Rand. Okay, and then I'm going to remove this income statement here just to show that we are done. Okay, the one without the label shows that we are done. Okay, and then we can now see if there's any other income that we have in our pre-adjustment trial balance. You can see all these ones here seem to be expenses, and they are expenses. As I said earlier on, I've gone through it, and in additional information, we are not told of any other income. Okay, so if you have no other income, you will just go to your income statement and just record what you have already. Okay, so I'm just going to put a box over my other income, and then I'm going to add the 2 and just put them here on top. Okay, so my other operating income is equal to 61,300 Rand. Now the next thing I will move on to is operating expenses. Okay, and the first thing I will do is to record the operating expenses that we have down here. And the first one, as you can see, is depreciation for both equipment and vehicles. So we're going to add the 2 together, and it's going to be the depreciation in our operating expenses. And the depreciation is the sum of the 32,400 for equipment plus the 42,250 for the vehicles. And what answer does it give us? It gives us 74,650 rand. Okay, now that we are done with the depreciation, let me remove that label. Okay, and then obviously interest on fixed deposit, we know we'll do it later after the operating expenses. After all our operating expenses, our interest on loan is an expense as well, but we will do it also after operating expenses. Okay, so the interest on fixed deposit and the interest on loan usually come as the last thing before you get to your taxes and net profit. Okay, that's if you're given the tax expense as well. We have bad debts as well of 2,000 rand, so I'm going to put that down. Bad debts, we know that's an expense. Okay, and the amount they were given was 2,000 rand. Remember, 2,000 rand. And then the next one that we have, let me take this one out. We're done with bad debts. Provision for bad debt adjustment. Okay, remember that one as well. Provision for bad debts had gone up from the previous year, so it goes under operating expenses. If it had gone down, it should have gone under other operating income. Okay, and the amount is 150. And then we go and remove this label, written income statement. And then the next one is trading stock deficit. Okay, trading stock deficit of 1,700 rand that we had done earlier. So I'm going to put it down. And it's 1,700. I remove that one, and then the last one that we have here on our calculations that we have done is the consumable stores of 5,500. So I'm going to write it down, and the amount is 5,500. Okay, so we are done with the calculations that we had done earlier on, so we can continue with our pre-adjustment trial balance. We were here by the insurance, and we are told it's 6,600. And if we go to additional information, is there anything on insurance? Now we are looking at the ones we have not highlighted as yet. And you can see we have nothing on insurance. Okay, so if we have nothing on insurance, we'll just take it as it is and record it under our operating expenses. So we have insurance 6,600. Okay, and make sure we go and highlight that one. Okay, the next one we have is bank charges. Bank charges, and we are given there 3,100. Okay, and then we go to additional information. And here number 10, okay, I shouldn't have highlighted it as yet. Remember, service fees forms part of bank charges, and we're told that the service fees according to the bank statement for February 2020 have not yet been recorded, and it's 275 rand. Okay, so we needed to have added it to our bank charges. So if you go to the pre-adjustment trial balance, the bank charges is 3,100. Okay, so we need to put here bank charges, and the amount there is 3,100 plus the 275 rand. Okay, so if you have any additional bank charges in your additional information, you need to add it to your bank charges. Okay, sometimes it's called service fees, sometimes it's called interest on overdraft, and so forth. Okay, so you will have those as bank charges, and the amount is 3,375. Then we can go back to our pre-adjustment trial balance and ensure that we highlight that one. Okay, and then we move to the next one, which is water and electricity, and the amount is 21,350. Okay, so I'm just going to put the water and electricity in my operating expenses. Okay, and then before I put the amount, we need to go back to our additional information and see if there's anything on water and electricity. And you can see we have nothing else on water and electricity, so we can just put that amount as it is, 21,350. Okay, and once we put it down, as usual, we highlight to show that we are done, and you always make sure obviously you do this to see what you have missed. And then the next one we have is telephone, so we go back to our operating expenses section of the income statement, and before we put the amount, as usual, we go to our additional information and see if there's anything on telephone. And you can see note number 12 tells us that the telephone account for February 2020 has not yet been paid. Okay, has not yet been paid. So if you have not paid an expense, we know that falls part of our telephone payable or accrued expense, which will be in the current liabilities section of the balance sheet. Okay, but it will also affect our income statement. So let's remember that it's 480. So what we'll do is that we'll take the one in our pre-adjustment trial balance of 3,950, and then we add the 480 which we have not paid as yet, and that will form part of our telephone account, and it gives us an answer of 4,430 rand. Okay, and then we also go to our calculations and put the telephone payable, okay, because we still owe that money, so it will be part of our current liabilities as I just said, and it was 480. Okay, and it will go into the balance sheet. Okay, now that we have done that one, we can go and highlight the telephone account and go down to our additional information and make sure that we also highlight the additional information for telephone. Then we can go back up to a pre-adjustment trial balance. We have the interest on loan, okay, which we should have highlighted. Remember, we had done it earlier on because we have already calculated it. As you can see down here, we have the interest on loan, which we had calculated. So we move on to rates and taxes, and it's 11,900 rand. So we'll go back to our additional information, and you can see number 2 says rates and taxes include a payment of 4,080 rand for the period of 1 January 2020 to 30 April 2020. Now, one thing to figure out when you're given dates like this is to ask yourself, what is the financial period ending? Okay, and that is the day at which you are preparing the financial statements for. Okay, so our year end is 28 February 2020. Okay, so every expense we have incurred until that period belongs to this period, and every expense we have paid for the following period or after that date belongs to the following financial period. So we need to remove it from our expenses, that is prepaid expense, and it will go into the current assets portion of the balance sheet. So as you can see here, we have paid 4,080 rand, and it's important to ensure that we remember that it's included. Okay, rates and taxes included a payment of. That means that 4,080 rand is included in these 11,900. But we know that from the 28th of February 2020, everything that we have paid after that date does not belong to this period, so it will not go into our income statement. And we have paid from the 1st of January 2020 all the way to the 30th of April 2020. So if we count 1st of January to the end of January, that's 1 month. February is the 2nd month. March is the 3rd month. Until the 30th of April, which is April, is the 4th month. So we have paid for 4 months. We know that January and February falls part of this financial period, but we know that March and April 2020 does not form part of this financial period. Okay, so we need to take out that amount for those 2 months and put it into our current assets section of the balance sheet. So let's go and do our calculation. We know that our rates and taxes will go here. Okay, and then we also have here prepaid. You can write it as prepaid expense, or you can write prepaid rates and taxes. And the amount there is 4,080 times 2 months over 4 months. Remember, March and April form part of the next financial period, so we want to take out that one. So it's times the 2 months out of the 4 months that 4,080 rand belong to. Okay, and what answer does it give us? Gives us 2,040 rand, which belongs to the next financial period. That's why it's a prepaid expense and it goes into our current assets. Okay, and then our rates and taxes here, we take the amount that we have in the pre-adjustment trial balance. How much was that? We have 11,900 rand, so we're going to have 11,900 rand, and then we minus the 2,040 rand because it does not belong to this financial period. Okay, and what answer does it give us? Gives us 9,860 rand. Okay, I hope it has made sense, so we can continue. Let's highlight that one. Okay, now we move on to the next one. Salaries and wages, we are given 86,000 rand. Okay, before I do that, let me just make sure I highlight rates and taxes here. Okay, and then I go number 5 here. I also need to highlight it. Remember, we had done this one here with the loan. We just need to put it in when we get to the current liability section of the balance sheet. So we move to see if there's anything on salaries and wages in our additional information. And the only one we have is number 11, but it belongs to the advertising campaign. So we'll just put the salaries and wages as it is, 86,000 rand. So I'm going to copy the salaries and wages and put it down here. And the amount was 86,000 rand. Okay, that was an easy one. So we just go back and highlight it. And then another one that we have here is advertising, and it's 22,630 rand. So let me write down advertising. And as we saw, there's a note on advertising here towards the end. Number 11 tells us that an advertising campaign was launched on the 1st of July 2019 for a 12-month period, and the amount of 18,800 was paid. The advertising account has not yet been adjusted. An equal amount was budgeted to be used each month for this campaign. Okay, so what are they telling us here? We paid for an advertising campaign and it's for 12 months, but it began on the 1st of July 2019. So what are we trying to see? We're trying to see if we overpaid for longer than our financial year end. We can tell that we have paid over and above the financial period, okay? Because if it started on the 1st of July and it's for 12 months, we know that it ends on the 30th of June 2020. Okay, so we need to calculate how many months fall out of our financial period. So it's from the 1st of March, the end of March, and then April, May, and June. We have paid for 4 extra months after our financial period ends. Okay, so we know that our income statement will only record the one which belongs to this financial period. Okay, so we need to take that into account. So first of all, let's go to our current assets section. Remember, if we have paid for something outside our financial period, we know that it's a current asset because it's a prepaid expense. Okay, so I'm going to write here prepaid advertising, and then the amount there we have is the 18,800 rand, which we're given in that additional information, and we multiply that by 4 months divided by 12 months. Remember, it was paid for 12 months, but we know 4 months fall outside of our financial period. Okay, and what answer does it give us? It gives us 6,267 rand. Okay, so we need to remove that from the amount we are given in our pre-adjustment trial balance. The advertising amount there is 22,630. So we're going to take 22,630 and we're going to deduct that 6,267 that we had just calculated that does not belong to this period. And what answer does it give us? 16,363 rand. Okay, now that we have done that one, we can highlight it, and then we go down to additional information and highlight that one, and you can see we have just done everything in our additional information. You can see we have highlighted all of them. Okay, you just need obviously to always just double check quickly, and then once you have done that, you can see our nominal account section. We are done. There are only 2 things we have not highlighted, which is the loan amount and the creditors control, which goes into the liability section of the balance sheet. Okay, so we'll get to that now. Now that we are done with everything in our operating expenses, we can now total them up. So I'm going to draw a box over my operating expenses and put the total on top. And what is the total? It gives me a total of 231,978 rand. Okay, let me put it in bold so that we can see it properly. Okay, there we go, 231,978 rand. And remember, we put it as a negative because it's an expense. Okay, operating expenses. Now that you are done with that one here, what we need to do is to put the operating profit. Okay, so we put here operating profit. Okay, now that we have done that, we just take our gross profit plus our other operating income, and then we deduct operating expenses, and it gives us our answer. Okay, so let me put it in bold as well, and you can see we have operating profit of 155,200 rand. Now, after our operating profit, we need to bring in our interest on fixed deposit and our interest on loan. Okay, we need to bring them in, so let's do that now. Let me bring in our interest on fixed deposit, and the amount that we had there is the 13,500 rand, so you can see down here. And then let me remove that one to show that we are done. And then we have our interest on loan as well that we need to bring in. Okay, and now how much is it? It's the 9,680 rand, and I'm going to put that as a negative, obviously. Okay, and then the last thing that we have is just to put down our profit. Okay, so I'm going to put down here profit. Obviously, we're given no information about taxation, so if you're given no information about taxation, you will just do it as I have done it here, and you should be correct. Okay, and our profit is equal to the operating profit plus our interest on fixed deposit minus our interest on loan, and it gives us our profit of 159,020 rand. Okay, so let me put that nicely. And now we have just completed in full our income statement. Okay, and if you'd like to check out the one where we had taxation that we were given, you'll find the link to that lesson in the description below, like I alluded to earlier. Okay, now that we are done with our income statement, or the statement of comprehensive income, okay, let me just make sure that I remove this one here to show that we are done with everything concerning income statement. I just need to take my profit from the income statement and put it into my statement of changes in equity. Okay, so I just need to do that. So under my statement of changes in equity, obviously I've put down the balance at the beginning of the period, and then we have drawings that I've put there as a negative, and then we have profit now. Okay, profit or loss, whatever it may be. If you made a loss, you put a loss. If it's a profit, you put it as a profit, and then we take that amount of 159,020 rand as the profit. Okay, and then once we are done with that one, we just need to get the balance at the end of the period. Okay, balance at the end of the period. So let's do that. Okay, balance at the end of the period, or the balance as at the 28th of February 2020, which is the same thing. Okay, and then once you have done that, you will just take your opening balance, or the balance at the beginning of the period, you deduct the drawings, and then you add the profit for the year. Okay, if it's a positive, and then you should have your statement of changes in equity completely done. Okay, and then now that we are done with the statement of changes in equity, we can now go to our statement of financial position and complete what we needed to complete. Okay, what else do we have here under our other calculations? On the balance sheet, well, we have the interest payable that we still need to account for, and the telephone payable, which goes into our current liabilities section of the balance sheet. Okay, so we'll deal with that one. So let's just total up our current assets, because we've done everything concerning our current assets. So I'm just going to total up everything we had calculated, and you can see on top here our current assets equal to 292,632 rand. Okay, and one thing that I needed to do here with my accumulated depreciation on vehicles is to ensure that it's a negative. Okay, because our accumulated depreciation is always put as a negative. Okay, now that we have done our non-current assets and now our current assets, let's total up our assets. Okay, always after you do your non-current assets and your current assets, you now put total assets at the bottom. Okay, and then once you've done that, you just add together your total non-current assets plus our current assets, and it should give you your total assets. Okay, and once you have your total assets, you now move on to equity and liabilities. So let me write them down quickly. Equity and liabilities, and then we'll begin with equity. Okay, we'll begin with equity. And what do we have under equity? Well, once we've done our statement of changes in equity, we're just going to put down capital. And then what is the capital? Well, it's the answer that we have here. Remember, when we calculated our statement of changes in equity, the balance at the end of the period, or the balance as at 28 February 2020, is the 654,720 rand. And that is what we're going to put as capital, 654,720 rand. Okay, so we needed to do that one there. So obviously the equity is only one line item, so I'm just going to put it here under equity on top. And you can see I'm totaling up all my subsections as well. Now that I'm done with the equity, I move on to the non-current liabilities. Remember, the non-current always comes before the current, so let me put on non-current liabilities. We know that we only have one non-current liability. That's the loan from ACM Bank. So I'll write that down, and the amount is 88,000 rand. So I'll put that down under non-current liabilities, and I put in the amount of 88,000 rand. And once again, I will put the total here, which is the 88,000 rand, and then I move on to current liabilities. So before I forget, let me highlight here my loan amount. Okay, and we know that our current liabilities also includes Creditors Control. So let me take that one there, and we're given there 103,469. So let me put that Creditors Control, and it was 103,469. And then we'll move on to the next one. Let's just highlight the Creditors Control. And after highlighting the Creditors Control, you can see our pre-adjustment trial balance. We have accounted for everything, as well as our additional information, as you just saw. So we just need to go down to our calculations and see what we have not done. And you can see we have two here. We have the interest payable, so we need to record that. Okay, and that's regarding the loan that we had calculated earlier, and the amount is the 1,613. And then we also have the telephone payable, and the amount there is 480 rand. Okay, and then once we have done that, we can just remove this 2 here. Okay, now I can total up my current liabilities, and it comes to the creditors control plus the interest payable plus the telephone payable. It gives me 105,562 rand. Now that we have done our non-current liabilities, we have done our current liabilities, we now have total equity and liabilities. Okay, and we will take our capital, okay, the totals that we had done, and we have the capital there, and then we have our non-current liabilities, and then we also add our current liabilities. And remember, the answer should equal our total assets, and you can see there we have it. The answer for our total equity and liabilities is 848,202 rand, which is equal to our total assets of 848,202 rand. Okay, if your total equity and liabilities does not equal your total assets, then you know you have done something wrong somewhere. Okay, and you need to check what that may be, but you need to make sure that they are the same. Then you know you've gotten everything 100% correct. That's how we do our statement of financial position, our statement of comprehensive income, and our statement of changes in equity using the pre-adjustment trial balance and additional information. Okay, you can do them one by one until you complete it, or you can do them at the same time, okay, one after another, depending on the information that you are dealing with. And I hope it has made sense. I hope you have gained value from this lesson. And if you have, please subscribe to our channel, like this video, and share it to those you think it might help. Till next time, cheers.